So first, I'll start by saying Happy New Year. It's certainly interesting enough. And we'll just dive right in to what's going on in the gold and the silver markets. But I'm talking about, of course, the spot markets. So I pulled this up. This is the volume on the options at the CME group. This first one is in gold. Spot gold, the spot gold contract. So what you can see, it starts at 2018. That's the second half of this year, and we're not even done yet because this only runs through July. So you can see this huge spike in contracts that have been bought in, this is spot gold, and then this is spot silver. Even more extreme, right? So why have we seen nonstop to overvaluation levels? Because the traders have been piling in here. So don't worry about the volatility, because with all of this piling in, and they've done this a number of times, but the CME has raised its margin requirements, which means that a lot of those contracts were done purely on debt, borrowing to buy those contracts. And if they raise the margin requirements, that means that more you have to come up with, or the traders have to have more cash available, and that is supposed to slow it down. And they did that, and this is what happened in 2000 and actually, what am I talking about? Yeah, 2011, but also back in at the beginning of this trend in 1980. So the CME, kind of like the Federal Reserve, using interest rates to regulate the rate and speed of inflation, the CME is attempting to regulate the rate and speed of those contracts. CME on Friday evening, so this was last Friday evening when we saw spot silver actually go above $80 an ounce. So both spot gold and spot silver making new all-time highs. So on Friday evening, they raised the margin to trade to $25,000 per contract, and that was effective yesterday on Monday. So that's an additional $5,000. So what that also means is that for those entities that are sitting in those contracts and wanted to maintain it, maybe they had to sell some of those contracts off. Wow, wasn't this a good time to take profits? So that's really what's been happening in these markets. Traders are booking profits because they're kind of anticipating that what happened back in 1980, what happened back in 2011 could happen again, which means that because of the requirement, the margin requirement, it pushed the spot contracts into that, remember that cup shape? So pushed the prices down. And then, of course, they went back up, concluding the cup. Now, it took a while. So is that going to happen again? Are we going to be looking at this long drought? No, we're not, because this time actually happens to be different in that there is a shift that started about a year ago in January with the physical markets taking over for pricing and for price discovery. So this time actually is different because we are transitioning into a new system. What was happening in 1980? There was the kickoff to the pure debt-based system. What was happening in 2011? We were attempting to recover from the great financial crisis. So both of these things, the CME as well as the central banks, were tasked with controlling what the visible price of gold and silver were. Because as you should be able to see by now, a rising gold price is an indication of a failing currency. And with the devaluation trade, all the talk, that's really what we're looking at. But we can dig into this a little bit more, and I want to do that. Spot silver is on track for its best annual performance since 1951. And let me tell you, it isn't even marginally close to its fundamental value. But I want you to look at these extremes. This is as pertains to the gold contracts, and falls 5% yesterday as traders book profit after rally to record. It is the second time the metal has plunged that much this year. Here they are. I'm doing the circle there and the circle there. So it's easy to do in a paper market, right? Because it's just a contract. Quick and easy to buy, quick and easy to sell. Different kind of reaction in the physical metals markets that takes a minute because it's physical. It's not boop, boop, boop. This is real. That, my friends, is not real. But let's take a look at the spot gold contract, and you can see that even better. And remember, we talked about those 200-day moving averages? Even here's those two drops that I just showed you on the previous chart. But even with the yesterday's, and today it's up again, we'll talk more about that in a second. But even with that 5% correction, we're still over 20% away from that red line, that 200-day moving average. And remember, technically 10% is a lot. It doesn't mean anything, right? It can stay in a range here. It can go back up. Is it going to, what I really want you to understand is we're talking about easy to buy, sell, and manipulate contracts, unlike the physical. But I want to talk about silver as well, because I know that's where everybody is going anyway. And look at the range. That's what I'm trying to show you. That volatile range just yesterday on spot market. Going back to before 2020, there is nothing like that trading range. So it went up, it went above 80, and then it closed down at 72 and change. And you can see that ginormous range. Let's look at it a little bit more closely in the spot silver chart, because you can see, look at that huge run up in those contracts, right? And then what happened after that? Okay, so it closed at $72.15, which is still 71.6% above that 200-day moving average. Look, I know that it's always more fun when things go up, because psychologically you're going, isn't that great? But I frankly only really watch the spot charts because I know that you do, and I want to help you understand what you're really looking at, because I know it's fiction. Even at $80 an ounce, silver is severely undervalued. Even at $4,400 an ounce, gold is severely undervalued. And the markets, I mean, they're happy. You're not able to find one Wall Street analyst out there that isn't anticipating a banner, at least a kickoff, banner 2026 kickoff in the stock market. All of them, 100% of them. I don't know, that's a little daunting, but it's an anticipation of more of this. So is this really about any of these markets going up? Because quite frankly, while part of what's happening in silver and gold is also in anticipation of more AI energy facilities, of which they would need silver and copper and gold, some of that's probably baked in there too. Just keep in mind, nothing goes straight up, nothing goes straight down. It all bounces along the way. And I wanted to remind you of how this really works, because we're going to take a look at what happened during the 2008 financial crisis with spot gold, gold stocks, and the collectible gold coins. Okay, so this is the chart that I created way back then, and you can see that spot gold went down, gold stocks went down. the physical markets, which are different than the paper markets. Now look, this stuff, just this raw piece of gold, is definitely impacted at this point by what happens in those spot markets. But this stuff, they went up and created a new high for this trend cycle in 2008. More than likely, and I don't have that data yet, but when I do, I'll show it to you. More than likely, we have concluded that cup, and now we're going to go to a breakout in this. More about that later as I have it and as I can show you. Because again, on the top, that's spot gold, and that went down. The middle are the gold stocks, and that also went down more than the spot market did, and the bottom is the collectibles. There is a finite amount of the physical. There is an infinite amount of the digital. Your choice. But the reality is if you don't hold it, you don't own it. Don't get blinded by Wall Street's lies. Just wherever you are inside of your cycle, keep accumulating. This is from this morning. Metals rebound after plunge from the records, and that happened to be, the time is on the end of that slide. But yes, remember, nothing goes straight up, nothing goes straight down. You are always going to get bouncing along the way. And as long as you get higher and higher lows, and this is something Mimi has learned, and she's recognized it even in her work as we're tracking what's going on, not even with the markets. If you keep getting higher and higher lows, I guarantee you, you will get higher highs. And if you keep getting lower and lower highs, I can guarantee you, you will keep getting lower and lower lows. At the moment that I recorded this was earlier today. I don't know where it is right now because we've been working all morning. But spot gold happened to be up about 54 bucks almost at 43.8617. Spot silver was up $5.37 at that moment, 75.83. And again, nothing goes straight up, nothing goes straight down, always bouncing along the way. Don't believe the Wall Street lies. Just keep accumulating. Be your own central bank, because the reality is if you don't hold it, you don't own it. And you're battling the Federal Reserve, and you're battling the CME and the LBMA and everything else. I'm perfectly comfortable sitting in my physical metals. I don't care. Plus, what else do I have? I have surety in food, water, energy, security, barterability, wealth preservation. I have a wealth of community. It's been so gratifying this year, as well as shelter. That's what we need to lead a reasonable standard of living.